When the chief executive of the world's most complex municipal ledger enters his first 100 days by declaring a $5 billion operating deficit while simultaneously attempting a hostile takeover of the police department's specialized response assets, you aren't just looking at a political honeymoon. You are witnessing a systemic internal control failure.
City Council Speaker Julie Menin ups the ante in her battle over the budget with Mayor Mamdani.
We have said a hard no to raising property taxes 9.5%. That is unacceptable.
Another escalation in the simmering tensions between Mayor Mamdani and Julie Menin as the moderate council speaker took her fight with him over the budget to the National Action Network convention. Menin putting her opposition to the mayor's proposed property tax hike in stark racial terms.
If we were to do that, we would be hurting Black communities across our city. We'd also be hurting small businesses. 5,000 small businesses, many of which are Black-owned, have closed last year. 5,000. 25,000 jobs have been lost, mainly in the Black community.
Menin and Mamdani have tangled over competing budget proposals. The mayor insisting he needs Albany to approve taxing the rich and corporations to close his budget gap and threatening to raise property taxes if they don't. Menin says no new taxes are needed. Her plan focuses on efficiencies and reforms. For example, she says the city can save $860 million by simply not budgeting unspent money for positions that have remained unfilled.
We are auditing a management default where the mayor is attempting to liquidate the city's counterterrorism infrastructure to fund goodwill experiments, while the city council has issued an adverse audit opinion on a proposed 9.5% property tax hike. This is the NYC Operational Turmoil Audit, and for Camilo's house, we are documenting the moment where Zohran Mamdani's revolutionary administration hit the hard ceiling of fiscal reality and public disapproval on April 10, 2026.
The mayor, who campaigned on a promise to tax the rich, says hogwash to that. He says her plan would mean service cuts.
The things that will never be in question for me are the cutting of essential services to New Yorkers. We will never allow a New Yorker to have to go to sleep wondering whether those kinds of services will be in doubt the next morning.
I asked the mayor about Menin's hard no to raising property taxes.
When we put forward our preliminary budget on February 17th, I said then what I'll say now, which is that it is a path of last resort, one that we will spend every single day looking to avoid as we pursue a path of working with Albany to increase taxes on the wealthiest New Yorkers, the most profitable corporations.
Now, the mayor still has time to rethink his budget until he sees what he gets from Albany. But there is still one irrefutable fact. He can't shove the budget down the council's throat. They have to approve it, and he'll have to negotiate with a speaker whose politics are...
I am Camilo Motado, and this is Camilo's house. As a professional focused on forensic verification, I approach a mayoral administration like a distressed entity, whose management discussion and analysis does not match the actual statement of cash flows. In a standard audit, if a CEO claims he inherited a $12 billion liability, but magically finds capital to reduce it to $5.4 billion within weeks, you don't just trust the math. You perform a full-scale transactional review. Today, we are auditing the first 100 days of the Mamdani administration. We are analyzing the material conflict between City Hall and the NYPD, the budgetary deadlock over a massive property tax surcharge, and the market devaluation of the mayor's brand, which is currently underperforming compared to his predecessor by double digits. The operational breach that has triggered a civil war within the city's board of directors is the fiscal year 2027 budget. Mayor Mamdani, who campaigned on a tax the rich platform, is now hedging his bets by threatening a 9.5% property tax increase as a path of last resort. From an investigative standpoint, this is a material misstatement of his campaign promises. City Council Speaker Julie Menin has stepped in as the lead auditor for the opposition, framing the tax hike in stark racial terms at the National Action Network convention. Menin has disclosed that 5,000 small businesses, many of which are Black-owned, closed last year, leading to a human capital loss of 25,000 jobs. In accounting terms, Menin is performing a disparate impact analysis. She argues that raising property taxes by nearly 10% would impair the value of Black communities and squeeze the liquidity out of small-cap business owners. Her alternative budget proposal seeks to plug the fiscal hole through operating efficiencies. She claims the city can save $860 million simply by writing off unspent money for unfilled positions. Mamdani has failing graded this plan, calling it cherry picking, but the forensic reality is that the mayor is desperate for new capital from Albany. This information asymmetry between the mayor and the council suggests that the consolidated financials of the city are being manipulated for political leverage. The internal conflict reaches a boiling point when we audit the management of the NYPD. We are witnessing a functional default on the relationship between the mayor and police commissioner Jessica Tisch. Despite Mamdani practically begging Tisch to remain in her post, he is now pulling rank to liquidate the Strategic Response Group, SRG. The SRG is a high-value specialized asset, tasked with protest response and counterterrorism. Mamdani remains deeply committed to disbanding this unit, even as SRG officers arrested protesters at a Manhattan Palantir headquarters earlier this week. From a risk management perspective, this is a liquidation of security infrastructure. Disbanding a proven operational unit to replace it with dialogue units is a management experiment with no actuarial data to support its success. Tisch's support of the unit is a professional certification that the mayor is currently overriding. This comes amid an ongoing surge in anti-Semitic hate crimes, which Tisch reported skyrocketed by 182% during Mamdani's first month in office compared to last year. By decoupling the city's response to protests from its counterterrorism mandate, the administration creates a security deficit. We must also audit the math gate surrounding the city's deficit. In a high-frequency disclosure, Mamdani was asked how he found billions in 2 weeks. He claimed the initial $12 billion projected loss was reduced through savings measures and state commitments. As a CPA, I track the revenue recognition here. If the mayor can swing the ledger by billions based on Wall Street profits that haven't been audited, then the baseline budget is volatile and unreliable. The city council's claim that Mamdani doesn't know math is a forensic indictment of his reporting standards. The social equity of the Mamdani administration is facing a market correction. A new Marist poll has certified that only 48% of New Yorkers approve of the mayor's job performance after 100 days. In a comparative analysis, Mamdani is underperforming Eric Adams, who enjoyed a 61% approval rating at the same audit interval. This brand impairment is driven by multi-front beefs. The mayor is fighting the chief of police, the council speaker, and small business stakeholders simultaneously. When management is in constant conflict with its operating units, the enterprise value of the city drops. Mamdani's narrative is focused on restorative justice, but the voter shareholders are seeing a cost of living surcharge that he cannot amortize. His plan to increase the tax burden on homeowners is seen as a hostile extraction of capital. His defense that essential services will never be in question is a contingent disclosure. If the Albany inflow doesn't materialize, the city ledger will default, and service cuts will be the mandatory liquidation strategy. The final reconciliation of the Mamdani 100-day audit reveals an administration in total operational arrears. You have a chief executive who is liquidating specialized police assets while proposing double-digit tax hikes on the middle market shareholder. You have a city council that has withdrawn its confidence in the mayor's math. This is the anatomy of a governance default. My forensic verdict is that Zohran Mamdani has failed the 100-day stress test. He has incurred a massive reputational liability by mismanaging the fiscal disclosure. Until he can reconcile his math with the city council, New York City remains a distressed asset. The sub 10% approval gap is the market's final word on his managerial performance so far. I want to hear from you. Is the 9.5% property tax hike a necessary recapitalization of the city, or is it a fiduciary breach? Should the Strategic Response Group be liquidated in favor of dialogue units, or is that a risk management failure? Let me know in the comments. Your perspective is the only audit that matters when the safety of your streets and the solvency of your rent are sitting on the negotiation table. I am Camilo Motado, and this is Camilo's House. Subscribe to stay informed on the numbers, the laws, and the truth behind the headlines. Stay safe.